Welcome to Mikab Model College online tutorial. We hope at the end of this lesson, you will have acquired the expected learning outcome. Sit down and listen attentively as we introduce your subject teacher.
Welcome back to class. Hello students, my name is Mikab Obansa. The last topic we discussed in our accounting class was users of accounting information. We were able to highlight several users of accounting information, but today we are going to be discussing the accounting equation. This equation will be useful for those that use accounting information because the information is derived from what we call balance sheet in accounting. Now, before we continue, I want to see what an equation is. Mathematically, an equation is a statement that shows that the value of two or more expressions are equal. I repeat, it is a statement that shows that the value of two or more mathematical expressions are equal. Now, accounting equation. The two expressions that we'll be discussing in the accounting equation, we'll be talking about the assets, we'll be talking about liabilities. Now we want to see the fundamentals that forms this equation. The fundamental accounting equation, also known as the balance sheet, represents the relationship between assets, and liabilities, and owner's equity. This owner's equity is also referred to as the capital with which we start off the business with. Now, it is the foundation of double entry. That is the next topic that we'll be discussing. We will be going little by little so as to introduce the next topic in the present class. Now, we said it is the foundation of what? The double entry principle. Therefore, the totality of financial accounting is based on accounting equation. If you are going to understand financial accounting, you must understand the basis, which forms the double entry principle, and thereafter the equation. Now, let us take a look at the equation. The equation is assets is equal to capital plus liability. Assets is equal to capital plus liability. Let us see what is even assets, what is capital, and what liability is all about. Now, an asset, here on the board we have it as the property of the business. They are owned by the business and they are expected to be of future benefit to the business. In other words, it is the property with which the business is run on day-to-day activity. It means that without an asset, the business cannot drive. Without an asset, there is no way the business can be run smoothly. Now, let us take a look at some example of assets. We have motor vehicle. How is motor vehicle an asset? Let me take Dangote PLC as an example. Assuming that Dangote is producing sugar, is producing cement, and so on in Lagos, and Dangote wants to cover the whole of Nigeria, how will Dangote be able to take all the products being produced to the various states that we have in Nigeria without the help of motor van? That is how a motor van is an asset. Then we have land. Land, we said it is a natural gift of nature. It is a free gift of nature. Without it, there is no business. Then we look at the other example, the building. When you talk about land, you talk about building. Without land, there is no building. There is no way a business can drive under a tree. Of course, no customer will patronize you. You need a building with which you will be able to run your business. Then we have plants and machinery for big organizations that are into production of raw materials and so on and so forth. We will not talk about asset without talking about cash. Cash is one of the biggest assets that is needed in the business. You need cash for the smooth running of the business. You need cash for restocking, you need cash for the payment of staff. If you are going to be able to hold your staff in your organization, there is need for us to have cash. Now, let us take a look at the next item that makes up the accounting equation, which is the capital, as you have on the screen. This is the total amount invested by the owner in a business. It is the proprietor's fund or net worth of the business. In other words, the value of the business is summarized in the capital. In other words, if you want to know the worth of the business, we will be talking about the capital that is being invested in the business. Now we take a look at the last item that makes up the accounting equation, which is liabilities. When we are talking about liabilities, what should come to your mind should be debt. Debt. Now, we are talking about debt in this context as the one that the business is owing an outsider. As you have on the screen, we said this is the indebtedness of the business to outsiders. It is an obligation to be paid by the business as time goes on. You know that the capital you have for a business may not be sufficient for you to run the business. There is every need for you to take a loan, maybe from the bank, maybe from a friend, or from the family members, so as to assist the business to make sure that it grows up to an appreciable height. Now we can see that the people that makes up liability, that is, the people with which liabilities can be collected from, are number one, the creditors, that is the people that supply goods to you. We have the bank. You can take overdraft, that is to say you can take much more than you are having in your account, provided you are a current account holder. Then you have owing, that is when you collect stock from a business, you collect stock from your supplier, the amount of money may not be paid instantly. Now the debt that is remaining unpaid is what we refer to as owing. Summarily, we need to understand that it is for us to know what really makes up this assets or this property of a business. We are going to be attributing them to two main personality. Two main personality, meaning that assets, as we have been explaining, is not just for the business alone. In accounting, don't forget, we treat business as a separate entity, different from its owner. It means that the business is seen as an artificial human being. They can sue and they can be sued. Therefore, it is owned by two personalities, but it may be controlled by one, which is the proprietor. Now, who are those personalities? Number one, we have the proprietor, the person that owns the land, the person that owns the building, the person that owns the cash, and the business is one of the personality that owns an asset in the business. Then the second person is the liability, that is those that have claim over the business. Don't forget that while we are discussing, we talk about you or the business collecting loan from the bank. You will agree with me now that the bank have a say in the business, because the business will have to pay the loan back to the bank. Therefore, they have ownership on the asset that is being used in the business. How? If you take a loan from the bank and you are unable to pay, it is the asset that you own in the business that the bank will come for. Therefore, ownership of an asset is not just for the business alone until you settle the debt that you are owing. Now, these two personalities form the source of assets, and they must be equal. Now, let us see this assets, this accounting equation. It is given as asset equal capital plus liability. Do not forget, in mathematics we were told that if you are given a variable and you are given 2, you can use 2 to find an unknown. That is, we will be taking a look at the positive one crossing the equality sign. Now, if we are to look for capital now, from the board, you can see that capital will be equal to asset minus liability, meaning now that capital will be standing as the subject, while liability will be subtracted from asset. Then, if we are to look for liabilities, we will be saying assets minus capital to give us liabilities. You can have this on your head. It will help you a long way, so that in the case of any exam, you will be able to quickly find any unknown given to you. Now, let us take some example. You can see from the screen we have a table. We are to complete the gap in the table. Now we see the first, we have assets, we have liabilities, and we have capital. In the first one, we have your assets given to be 20,000 naira, and the second one is liability, it is not given. And the third one is the capital, which is given to be 4,000 naira. Now, in this case, we will be looking for liability. Now, how do we get our liabilities? We see the solution. Don't forget that in this case, you are going to start with your formula again, which is assets equal liability plus capital. Now, for us to have it, don't forget in our table we have assets to be 20,000, liability is not given, then capital is given to be 4,000 naira. Now, for us to get liability, will be saying liability will be equal to 20,000, which is the value of assets, minus 4,000, which is the value of capital. Therefore, liability equal 20,000 minus 4,000, which is equal to 16,000 naira. Don't forget that we are discussing accounting. Whatever final answer you are going to have should be in a currency, either in naira or in dollar or in cedis, as the question will be presented to you. Let's take a look at the table again. We have the first one has been filled, that is why it's showing you green. The second one, asset is not given, and liability is given to be 3,000 naira, and we have our capital given to be 9,000 naira. Now we are to find assets. How do we find assets? Don't forget, the formula is always asset equal capital plus liability, or liabilities plus capital. Now, how do we go about it? Asset is not given here. Liabilities is given to be 3,000 naira, while capital is also given to be 9,000. What we are going to do is to add the two together to give us assets. Asset therefore equal to 12,000 naira. Don't just say 12,000. If you said 12,000, we will be confused. Are we talking about accounting here, or we are discussing physics? We will definitely put our naira, 12,000 naira. Let's take a look at the table once again. You can see we have solved for the second one, that is why it's showing you green. The third one now, asset is given to be 14,000. Liabilities is given to be 1,500 naira, while capital is not given. Now, how do you find capital? You can have capital by coming first with your formula again. Assets equal to liability plus capital. Now you can swing it. As you see on the screen, asset is given to be 14,000 naira, while liability is given to be 1,500 naira. But here the capital is not given. For us to have capital now, which is represented with letter C there, we will say 14,000 naira minus 1,500 naira. Now to arrive at capital to be 12,500 naira. So you can see now that we have completed the table. That is why you see all the unknown before is now showing you green. It has now been found. Now, we are going to stop this class here to continue in the next class. Thank you.
Thank you for taking your time to watch this presentation. We hope you have made some new discoveries. Please, take time to watch other related videos from Mikab Model College on this platform. You can also study the transcript of this very lecture by clicking the link below. If you enjoyed this lesson, please like the video. If you are yet to subscribe to our channel, please go ahead and do so. Feel free to share our videos to your friends and ask them to subscribe to our channel. Wishing you success in your career. Bye for now.